Welcome to Passionate World Talk Radio. Educate, enlighten, entertain. And today on Cool Your Heels with Lillian Caldwell, our special guest is Steve Hayes, who works with Fair Tax Organization. And you're probably wondering, well, what is a fair tax? So I'm going to let Steve give you a little synopsis of who he is, and then he can launch in on what is a fair tax for the American people.
Well, I'm happy to do that. What I guess I should say is that I'm a recovering tax attorney. I dealt with the income tax system for a long time. Anybody that has to deal with it, I don't care whether you're filing as a W-2 earner or if you've got a business and you're filing, it is absolutely a nightmare. The way it's become so complicated and so complex. And one of the biggest problems, Lillian, is all of us like to have prediction in our lives when we can. We like to know if we do this, this is going to happen. And with the income tax, it's really so general and confusing that for many cases, you don't have any idea what's going to happen. Plus, what was legal today could be illegal or change greatly tomorrow. Just like this election, depending on who controls the presidency and who controls the Senate, there are vastly different attitudes toward the way the tax burden is going to be allocated and to what is going to be taxed and at what rate. And that could all change in January, or nothing could change or whatever, but it's so unpredictable. So what we believe is we should look at what we think is a fair tax, which is a tax that collects money from the American people, not out of their paycheck, not through withholding, not through the payment of income tax, but with a retail sales tax on new goods and retail services, so that when you go to your store, like a Walmart or whatever, and you make your purchases, you have 100% of your income from your employer, and you pay out at the sales tax rate of 23% on what you buy, with the additional caveat that the fair tax has been created with a tax credit. We call it a prebate, which means that the first monies that you spend for a family of four, it's about $34,000, would not be subject to the fair tax. So we put a level down for the poverty level, the basic level that's set by the government every year. And anything above that, you're going to pay tax at 23%. We get rid of the most regressive tax of all, which is Social Security payroll tax. We get rid of the income tax, and we replace it with a form that is only filled out by about 10% of the people in this country who run retail establishments. So the rest of us, we pay our taxes, we make our purchases, and that's the end of the story. So that's why we think it's a fair tax. There are lots of economic advantages to it. We feel like all of the economic studies show the economy grows faster. But for most of us, particularly for a lot of people in your area, in Pennsylvania, where you've had a lot of manufacturing get devastated by competition from overseas, a lot of the reason that fueled that competition is that under our present system of income taxation and Social Security taxation, we unfairly favor imports when they come to compete against our U.S. produced products. And we unfavorably treat our exports as opposed to products in a different country. Because when you have a product made overseas that's sent over here, what happens is when it's sent, the country gives back a credit of their value added tax, which is anywhere from 15 to 25%, which means it comes over here at anywhere from 80 to 85% of the cost of what it sells for in their country. And it competes against our products, Conversely, when we send our product over there, we don't give any of our tax burden back, which is estimated, between 10 and 20%. That's carried in the price of our goods. We don't give it back. We simply make our products go over there, and when it arrives in the overseas country, what do? They add to it their 15 to 20% value added tax, which makes our product that much more expensive in competing with theirs. And there's a direct correlation to the cost of being able to compete when you have that type of disadvantage. And so the fair tax, we believe, would bring a lot of jobs, create a lot of opportunities, but it would also mean that people like you and I would be able to actually know how to budget for a few years, because we would know that we're going to pay 23%, and if they raise it on everybody, 24%, whatever, but it's all going to be visible. We're not going to fight over, how to hide this so that we don't know how much the tax is, which is what happens in DC. They don't want you to know how much tax you're paying. They hide it. Fair tax, you can't do that. Simple, and we think economically much more appropriate.
Now, for somebody on a fixed income, it just doesn't matter if they're going out and paying 23% every time they buy
Remember,
something.
they're getting that tax credit, that prebate. That means the initial purchases, and on Social Security, if it's an increase in cost of prices, and it's arguable how much the increase is going to be, because we're taking out all of the costs of the present tax system, the employer's contribution to Social Security, their own income tax, their cost of preparation, that have now included in the price. There's a good argument that the prices are not going to go up 23%. They may go up 15%, they may go up 12%. It depends on the product, how much of the cost is going to reduce. Competition will bring the price down. But that person who's on a fixed income is going to get a tax credit that allows the initial purchases that they make to not be subject to the tax. So yes, if you've got somebody on a fixed income that's making $100,000 a year, then they're probably going to have to pay a lot of taxes. If you've got somebody making $25,000 a year, then they're not going to pay much in the fair tax. But it's not going to be hidden. They're not going to be paying $1 for a loaf of bread that could cost 85 cents were it not for the tax burden. Everything's going to be on the table. And more importantly to me, Lillian, you and I have talked before about how it's very important in evaluating candidates and our government that we have as much of the facts as possible. Well, if every single person in America is not a taxpayer, a lot of people don't pay taxes because they're there. However, every single person in America is a consumer, and my grandchildren will go out and make purchases. And they're going to need money to pay not only for the cost of whatever the purchase is, but they're also going to need it to pay the fair tax. It's going to be apparent to young people and to the older people among us how much our government costs, because it's on every receipt. And I think that's really important. And plus, Lillian, if I were to ask you how much, and let's just make this up, how much does the Department of Education actually come out of what Lillian pays in taxes? You're going to look at me like, I don't even know how to start looking at that, because you pay taxes through withholding, you pay taxes through Social Security, you pay taxes through increased prices on goods and services. So it's hard to say. But if I had a fair tax and you said, and I said to you the same question, you'd say, well, I paid 23%. And let's say you paid it on 100 grand of income. So I paid 23,000 of tax. And of that 23%, it's representing the budget, which would be the equivalent amount of money being raised now, which unfortunately is way underwater to really balance the budget. But let's just take that as an example. You could back out how much of it was going to the Department of Education, and you could say, well, of every dollar I paid, 2 cents went to fund the Department of Education. You can literally do that on a napkin because it's all up front. Now, politicians who I've talked to, and I'm not talking about just one side of the aisle, but both sides of the aisle.
Yeah, understood.
Really don't like that. You know?
No, they're afraid. I mean, Trump hasn't shown us our taxes yet, and that was 4 years ago.
Nope. And a lot of these guys are going to not want to show you what is actually being paid. They may show you their income taxes, but they don't show you how much money their family made. I mean, I had a friend of mine that ran for Congress, Lillian, and he said, I can't afford to go. I can't afford to run because I'm making a lot more money than the 175 or whatever the salary was at the time, 160, whatever it was. And he said, I can't afford it because I've got 2 kids that are going to college and, you know, this type of thing.
Yeah.
And I can look at it in 5 years, maybe, but I can't do it today. And the guy, he said, the recruiter, whoever it was, sat him down and said, well, let me show you how we fix that. We can get your wife a job making, like she was a teacher making $50,000 a year, right?
Yeah.
We can get her a job for $300,000 a year. Plus, we can take the money you're making, and there's a way you can invest it where you'll get a higher return. Anyway, they had worked it out where he'd be making more money than he was making then because of all the things that won't show up necessarily on a tax return, but they're being paid. I mean, it's like Ted Cruz's wife suddenly became very valuable when he got elected to the Senate to one of the big investment banks. She was making $500,000 a year. He's only making 80,000. And you can go through on both sides of the aisle and you'll find that replicated all the way through. And these guys, they don't like being able or having to do it. They all talk about, like, you know, how do all these people have 3 homes, Lillian, on an income that they make? Come on. You know?
I don't know. I'm still unmarveled that Nancy Pelosi has a $1 million state with a security fence that surrounds the whole thing. So then when we have the revolution, she'll be okay.
And
so when she
armed guards.
was asking for money, I kept on saying, no, you sell your fence first and then we'll talk.
Yeah. I mean, and that's really the hypocrisy on both sides. I'm not a fan of either side, to be honest with you, because they're there, I'm afraid, more for themselves than for you. They really are. And
so how does this relate to state and city tax?
Well, you've got to come back to that and see it. Down in Florida, we don't have a state income tax. And at least until, well, right now, we don't have any, city tax of any kind. But I have friends in locations where they're going to be paying, assuming that if, President Biden is able to get his increases through, in California, they're going to be paying 62%. This one guy was telling me a few days ago, and what his rate would be, because California just raised their tax percentages. And so you've got a huge amount of people who are looking at, and look at Pritzker in Illinois. He's talking now that they're going to have to be making some painful cuts because they can't raise enough money to pay for everything they want to pay for. Governor Cuomo in New York is talking about how they're going to have a huge deficit. Now, if, again, President Biden has said that he wants to help out the cities and the states that have been harmed by COVID, okay? Maybe he'll bail them out. Maybe they'll repeal the limitation on state and local tax deductions, which basically had allowed people in other states with lower taxes to subsidize people in higher states. And I don't think it's fair. I think it should be very easy. And that's why if you get away from the income tax and you just go to the fair tax, the simple sales tax, and if you want to do something and you say, wait a minute, this is really adversely affecting people who are retired. And I'm old enough, I should be retired, Lillian. So I'm not talking about a mythical person. I'm talking about someone my age. And if you looked at it and you said, we think it should be different, well, you increase the amount of the tax credit so that more of their spending doesn't get taxed. It's simple and it's very easy to do and it's very visible. Everybody sees it. And right now in the fair tax bill itself, there's a provision that if a Social Security recipient, that if prices go up, the amount of the Social Security payment has to go up to match the increase. So if prices go up 10%, then your Social Security goes up 10%. That's in the bill. But in the future, if for whatever reason we decide that what we want to do is for a family, I don't know, of more than 6, I have no idea.
Okay.
We want to have a higher amount of credit. We can do that, but it's visible. It's not hidden, and it's not changing every week like it could be in our present system. It's all visible to everybody. We all get a chance to look at it. I get asked all the time, Lillian, how do we keep those guys and gals in DC from raising the rate? Because they think they know better how to spend our money than we do. And I say you keep them from doing it the only way you can, and that's through voting. It's just that with the fair tax, every single person in the country will see it. Now, when he talks about raising the rates for people over 400,000, there aren't very many people making more than 400,000. And so that's a very small select group. And it's ironic to me that they're looking to pick on the people who have the most ability to structure their income in such a way to pay less tax. Because even though you're putting a tax rate out, it's only on what you take as income. A lot of these people, it's like I get a kick out of the fact someone like, and this may not be true today, it was a few years ago, Larry Ellison of Oracle, a multi-billionaire. He pretty much financed all of his toys, his houses, his island, or whatever it is, his yachts, because he got a line of credit for it. And I think it was several $100 million secured by his stock, which if he had had to sell, it would have been a huge amount of tax because he had a very low basis in that stock, like pennies, and it was worth hundreds of dollars a share. A lot of tax, even at capital gains rates. So what does he do? He goes out and he gets a line of credit at a very, very low interest rate, by the way. Back then it was like 1.5 or 1.5, something like that.
Not 29.9%, that's for sure.
And he uses that money to buy his yachts and to buy his cars. And he doesn't buy a car like I do, Lillian. His cars are more than my house, okay? And he does that, he drives them, then he sells them, and he has to pay the interest on the loan, but it's a lot cheaper than it would ever be if he had to sell the stock. You see what I'm saying? Plus, he's assuming that his value of his stock's going to appreciate. So he gets to have his cake and eat it too, as my grandchild says, because he gets to do that. Well, those are the kind of people that aren't going to pay the tax. It sounds good in sound bites. We're going to punish the rich. But unless you do confiscation, you're not going to punish them. They're going to find a way to avoid it. And when you look at the evasion that's going on, the IRS finally updated their evasion projections, and they said it's probably going to be over $600 billion this year. And that's money that people should have paid in tax, but did not pay because they exaggerated their deductions. They took too much in terms of cash, not reported. And we've got a study at fairtax.org by a very renowned person who's looked at it all around the world, evasion, who thinks it's going to be closer to $1 billion of real evasion. that takes place. So people are avoiding the tax, and it's unfortunately much easier to do than income tax. I mean, when I went to a town hall, I had a senator and 2 members of Congress there, and I asked the question anyway. I said, how many of you in the audience have had an opportunity in the last 3 months or 6 months, I think I said, to get a service or to buy something at a much reduced price if you paid cash? And almost all the hands went up. And I said, what do you think? Do you think they did that because of the cost of credit cards and all? And they all started laughing. They said, no, of course not. They're not reporting as income. So you've got an agreement out there that when I was growing up, you wouldn't dare say that you were evading taxes. You wouldn't dare say that. But today, it's like, yeah, I mean, I get a plumber that comes to my house. He's going to fix a disposal. I said, how much is it? And he says, well, it depends. I said, what does it depend on, right? He says, well, and I can't remember how much exactly, but $300 if you give me a cash, and $365 if you pay for it with a check or credit card. And I went along and said, oh, really? Does it cost you that much for your accounting? And he looks at me like I dropped out of the sky and said, no, of course not. But I don't have to report it if you pay me cash.
You don't have an audit trail.
That's right. And if you look at,
you don't have any receipts.
Nope. But if you look at the sales tax, it's all going to be, he doesn't charge me the sales tax, let's say, then he's going to have a problem because number one, if I turn him in, he's dead. So he's potentially compromised himself to save $50. And the second thing is that the way they do sales tax now, it's fascinating to me because I've talked to some of these people that do this in California and I guess a little bit in Florida, mostly California. They collect $50 billion of sales tax in California 2 years ago. They have 2% evasion. And I said, well, how can you have that low amount of evasion? Because, you know, you've got all these mom and pop stores, you've got all these things going on. And he said, well, first of all, almost 90+% in California, and he said he thinks across the country, of the retail sales are made by less than 10% of the merchants. He said it's probably closer to 8%. And for them, it's an error that they don't want to make because they have, you know, accounting, they have systems set up. They're not going to evade. They're just not doing it. So he says our job is to keep the other 92% more honest. And I said, well, but how do you do that with a mini mart, you know, or something like that? And he said it's simple. They all buy things wholesale, and they have to sell them. And he said we make models, and we know that in an area like that, with the demographics like they are, and what the amount of purchases are, how much there should be losing in, you know, theft, how much in spoilage, and how much sales tax they should be generating. And he didn't tell me anything what the number was, but he said if they vary a certain amount, then we go audit them and we catch them. And we only have to do that once or twice in each group because word gets around how painful it was. And he said, sure, they cheat, but it's tiny amounts compared to the total. So that's how we can have the 2%. You know,
that's very interesting.
Yeah, and that's the way it would be with the federal. And that plumber, he had to buy the disposal somewhere. And what happens is they do the same matrix for all plumbers. And they say, well, you bought, you know, $5,000 of plumbing and you've got no sales coming in. Sorry about that. You've got no sales coming in and you don't have, thought I had it unplugged, Nancy. I'm sorry. I mean, Lily, I'm sorry. But
that's okay. I have an incoming call that I'm ignoring. Go ahead.
All right. So basically what happens is that the plumbers are all going to be reporting, and a lot of them are going to do it straight because they won't, you know, they're going to do it pretty close to accurate. The guy that's an outlier is going to get audited. He's going to get caught. I talked to a bunch of dentists, and they said, "Oh, we'd love it because we wouldn't have to charge all the sales tax or something like that." Or one guy was a real wise guy was saying that, right? And I said, "That's fine, but what happens if you commit a crime as a dentist?" He goes, "What are you talking about?" I said, "What happens?" And he says, "Whoa, you mean I could lose my license?" I said, "That's right." So, do you make all your money looking at teeth? Or do you make all your money by doing inlays and root canals and all those implants? And obviously that's what they do. And I said, well, then you've got to buy it, the materials somewhere. And
So
we
you
do
still
the
get
basics
tax
again.
on it. Yeah.
Yep. And they're going to catch you. And when
Yeah.
they catch you, it's going to be very bad because you're going to get nailed on that, and you're going to get reported for that kind of a crime to the state dental academy. How much would it cost you to be shut down for 3 months? And the guy goes, okay. Now, the income tax, they can evade fairly easily, Lillian, because it's so hard to catch. As long as they're not hogs, as long as they are pigs, and I don't mean not report income, but let's say, like they write off more things, perhaps. They're very generous with their deductions. The audit rate is so low right now. And the quality, when I first started working with the IRS, they had really smart people. And I haven't been doing it for a long time, but I've talked to people that do. And unfortunately, a lot of the people that used to go to the IRS aren't going anymore. They used to be CPAs there. There were attorneys that I worked with. There's still some attorneys, but actually in the field, lots of people with accounting degrees, some with advanced accounting degrees. And now you got a lot of people doing audits that are high school graduates with maybe 15 to 20 hours of accounting training. Well, they're not going to catch a lot of the things that go through. And so the amount of evasion, even under audit, that takes place is very high. And the chances, my daughter's a millennial, and there are millennials that have websites, or not websites, chat rooms where they talk about how to exaggerate your deductions so you pay less in income tax. On the internet. It's just a total mess. And one of the comments that one of the people, she sent me a picture of it. You got more chance of being hit by a bus if you're making, I think it was under 50,000, than getting audited. And he's right. So it's a terrible system. It hurts our economy. It encourages criminality through evasion because it's criminal. And it's not a victimless crime because you and I will pay the tax, if we're paying our taxes correctly, to make up for all those people that are stealing money from the government by not paying. Whether they're right or wrong in their ethics and methods, up to them, but it's against the law. And when you start having people violate one law, Lillian, how long is it before they start thinking and justifying violating other laws? I grew up in a society that believed that you needed to follow the law. If you didn't like it, you changed it. I grew up with parents that didn't want you to speed, not because you could maybe get away with it, but because it was against the law. That's not true in so much anymore. And I think the income tax has become a part of that whole philosophy about I'm going to get away with what I can because I don't want to give my money. I want to spend it myself. We go to the sales tax. Everybody pays the same way. Evasion is much less. Yeah, there's going to be people that evade, but at a greatly reduced amount. And we've got a chance to start holding our people in DC more accountable because we will see what they're spending and we will see how it's impacting each of us because every tax is a consumption tax, Lillian. If I take 10 cents out of your income, that means you only have 90 cents to use to consume. It doesn't matter if it's a Social Security tax, if it's a gas excise tax, if it's an income tax. It still reduces your ability to consume. So you're paying a consumption tax today because you have to make more money to net out enough to buy that good. It's just with the fair tax, it's up front. It's not hidden from you. The average worker may have to make $1.25 to net $1 to use to go out and buy things for their family, to pay rent, to buy food. What we're talking about is give that $1.25 to the guy or the gal, and they go out, and if they spend that 25 cents in fair tax, fine, it's their choice. But they choose. And I think that's one of the biggest things is they choose, they don't fill out forms, and nobody ever knocks on their door in 3 years saying, Lillian, you didn't pay enough tax and we're going to charge you this plus penalties plus interest. That's all gone. All you got to do is live your life. And April 15th, you're hoping it's sunny and it's a pretty day.
I agree. And unfortunately, we are out of time. So, Steve, please tell everybody where they can find you on the World Wide Web and how to look up your organization.
Go to fairtax.org. We'd love to have you read our information. We'd love to have you join us. We're all volunteers, but we think it's a way of helping bring our country forward into the next century and protect things for not only our generation, but for future generations. Thank you very much, Lillian, for having me on.
Thank you very much. And ladies and gentlemen and adults of all ages, thank you very much for joining us on Cool Your Heels with Lillian, special guest Steve Hayes with the Fair Tax Organization. Go look them up. It's an interesting organization, and it's something that you ought to contemplate in addition to your navel. You want to hear this all over again, go over to https://passionateworldtalkradio.com, and we're also heard in all social media. And before you go away and stray, let's see, Churton Collins in 1914 had this to say, though pride is not a virtue, it is the parent of many virtues. Thank you very much for listening. And remember, have a marvelous weekend, and don't forget to wear those masks.